Good morning, everyone. I think we can start now. Once again, good morning, ladies and gentlemen, and welcome to the very first session of Blockchain World 2.0, an extended and upgraded version of our highly successful blockchain series. Brought to you by Diaspora Digital Media in partnership with Digital Assets Management Academy, DAMA, based in Garki, Abuja. Blockchain 2.0 is designed to take our learning deeper, broader, and more practical as we explore the rapidly evolving world of digital finance, blockchain, and cryptocurrency. Today is Wednesday, July 9th, 2025. We are kicking off this new phase with a fundamental session titled, What is Blockchain and Cryptocurrency? This session is perfect for the beginners and those looking to refresh or solidify their understanding. You will explore the fundamental concept of blockchain technology, the origin and nature of cryptocurrency, and why these technologies are revolutionizing everything from money and identity to ownership and governance. Leading us in today's discussion are two of DAMA's most trusted voices, Mr. Moses Obaje, also known as AI Prof. You're welcome, sir.
Thank you for having me, Mr. Ibrahim, and good morning.
Good morning. And Mrs. Shipra Puluma, popularly referred to as Digital Mama. You're welcome, ma'am.
Thank you for having us this morning.
As always, I remain your host, Ibrahim Umar Wase, and with me is Mr. Tuchuku Raphael. You're welcome, Mr. Tuchuku.
Welcome, Ibrahim. Good morning. Good morning, our guests, Mrs. Poloma and Mr. Moses Obaje. You're welcome to the program.
Good morning, Mr. Tuchuku. Happy to have you.
Good morning, Mr. Tuchuku. Thank you.
So, as always, please keep your microphone muted unless called upon. Feel free to engage actively in the chat. We will have a question and answer segment to address your question. Once again, welcome to Blockchain 2.0. Let's delve into it fully. So let's begin with the foundation. Mr. Obaje, what is blockchain and how does it work? I mean, break it down for our audience in every part of Africa who are hearing the term for the first time.
Okay, thank you, Mr. Ibrahim. Please confirm you can hear me. And good morning to all of our listeners.
I can hear you loud and clear.
All right. Thank you for having me this morning once again. My name is Moses Obaje, like rightly introduced. And with the question, what is blockchain? I think just like Mr. Ibrahim, you rightly mentioned, this is blockchain 2.0. In 1.0, we were able to dissect this same topic, what is blockchain? And with reference to your question, I will still repeat the definition of blockchain that I used in blockchain 1.0. Why? Because the definition has never changed and it will not change. All right. That being said, let me go into the meat of the matter. I was trying to connect my other device. So let's get into the meat of the matter. All right. Blockchain is a decentralized distributed ledger technology that securely records transactions across many computers. Now, why do these transactions get recorded across many computers? It ensures data transparency immutability, and trust without the need for a central control authority. Like a bank or government, their transactions are being controlled. But with blockchain, where we talk of decentralized distributed ledger, there is no central control. There is that openness, there is that transparency. So thinking of it as a digital ledger or record book, where each block, each page of that record book is called a block. Now, this block contains a list of transactions. Once one page is full, it is linked to the previous one. If you have page 2 and page 2 is full, it is linked to page 1. Now, because of that link, it forms what is called a chain of blocks, hence the name blockchain. If page 3 is filled, it is linked to page 2. There's a continuity and there's a connection between page 1, page 2, page 3, even till infinity. They are a continuum, and that's why it is called blockchain. Now, how do blockchain work? There is what we call the transaction initiation. You initiate a transaction whereby a user requests a transaction, maybe sending cryptocurrency, maybe recording a smart contract, or what have you. Now, once that request is made, it is broadcasted to the network. Now, the transaction is broadcast to maybe a peer-to-peer network consisting of different computers that we call nodes. Now, these computers that are being called nodes use what is called the consensus mechanism, maybe proof of work or proof of stake, to verify the validity of these transactions. And once these transactions are verified or are stamped valid, the transaction is grouped with others. Like I said, when page 1 is filled, page 2 is filled, it is connected to page 1, page 3 is filled, it is connected to page 2. Now, once this transaction is validated, the transaction is grouped with others into block. And this block might include a list of recent transactions. It will include a timestamp, that is the time that this transaction was executed. It will include what is called a reference, or in blockchain language, hash, which connects it to the previous block. And this unique hash is generated via cryptography. Now, like I said, the new block is added to the existing blockchain in chronological order. Each block is linked to one another before it starts using its hash. And at the end, we call it the completion stage. This transaction, once it is linked, is now complete and permanently recorded on the blockchain. Thank you very much. That's the simple analogy that I can give you with regards to blockchain. Thank you.
Thank you very much, Mr. Moses Obaje. That's a powerful start. But here is where it gets confusing. Mrs. Poloma, what makes blockchain different from a regular database? Help us understand the real innovation here.
Thank you, Ibrahim, for this question. Blockchain differs from a regular database in several ways. One, as earlier mentioned by Prof himself, this blockchain is decentralized. Decentralization is key because blockchain is decentralized. It is distributed. You know, it's a distributed ledger that records transactions across various networks There's various computers, as you earlier mentioned, what we call in this space nodes. And there's no central authority, unlike in the regular databases that we have. Somebody controls that very database. But in this case, in the blockchain, it is decentralized and there's no central authority. And another aspect is immutability, meaning transactions on the blockchain are immutable. This means that they cannot be altered once the transaction has scaled through. You cannot alter it. It cannot be deleted once they are recorded. And like earlier mentioned, we have also the cryptographic hashes. Each block of transaction is linked, to the previous block through what we call cryptographic hashes. This ensures integrity of the blockchain. And then another aspect that we need to look at is the transparency and security of the blockchain that differentiates it with the regular databases that we have. Any transaction on the blockchain or all transactions on the blockchain are transparent and there's public visibility because anyone can go, key in, and then see these transactions. So it's for public view for everybody. Unlike the regular database, whereby it's restricted for the person holding that because it is centralized. And then we have what we call the consensus mechanism. Blockchain uses consensus, meaning there have to be an agreement for any transaction to scale through as either proof of work or proof of stake to validate all the transactions and ensure that there's integrity in the network itself. And the key benefits that one derives on the blockchain actually is that there's security because it is decentralized and it is immutable. The immutable nature makes it more than the traditional database that we have. And then there's trust because the transactions on the blockchain are trustless transactions. They eliminate the need for intermediary because in the regular database, for you to have access, you have to go through somebody to be able to access the regular database. But in this case, it eliminates intermediary and there's increased efficiency because the blockchain is automated. So it processes and it increases in various, it increases in various industries. So as whatever that is imputed is just there. So these differences make blockchain a very unique and powerful technology with a wide range of applications. They are varied, there are many, so many. Thank you.
All right, I'm glad we are refreshing our minds on the things that we did in the past, because some of us here, some people in the audience, might have joined most recently. So it's a good thing that blockchain is something that has come to stay, and it will stay for a long time. But there is another concept that is normally brought up when it comes to technology, and that is cryptocurrency. So I would like Mr. Obaje to help us. Is cryptocurrency a subset of blockchain, or what is the relationship between both? Mr. Obaje? I think you are muted. Mr. Obaje, you are muted.
Yes, please kindly come again with your question, that line of question, please.
Okay, I asked, is cryptocurrency a subset of blockchain? What is the relationship between both?
All right, you mean between cryptocurrency and
And
blockchain? Yes,
blockchain,
yes,
yeah.
yes. There's a relationship. Now, cryptocurrency is a type of digital or virtual currency, just as you hear crypto and currency. Now, why is it a currency? It is because it uses cryptography for security. It's a currency that uses cryptography for security purposes. And that's why it is called cryptocurrency. The crypto simply means cryptography. All right. So what it simply means is cryptographical currency. That's why it is called cryptocurrency. Why it uses cryptography for security. And also, it operates independently of any central authority, be it government or a bank. It is independent of any central authority. So, cryptocurrency is a decentralized currency. Just like we said, blockchain is a decentralized technology. So you can see there's already a relationship. Both of them are decentralized. And that is why we say that cryptocurrency is decentralized system to record transactions and manage the issuance of new units of this cryptographic currency. Now that being said, when we look at the relationship between cryptocurrency and blockchain, blockchain itself is the underlying technology that powers cryptocurrency. It is the underlying technology that powers most cryptocurrencies. So it is the engine room of cryptocurrencies. So how are they connected? How are they related? Now, let's look at blockchain and also look at cryptocurrency. Now, blockchain is a distributed ledger technology that records transactions in a secure, transparent, and immutable way. Now, let's look at cryptocurrency. It's a digital asset, just like Bitcoin or Ethereum, that uses blockchain technology to operate. So without blockchain technology, we will not have digital assets. Number two, under blockchain, each block contains a list of transactions. That's what makes it a block. Now, if we look at cryptocurrency again, each transaction of cryptocurrency, be it buy, be it sending, be it selling, is recorded on a block in a blockchain. So you can see that they are interwoven. Without blockchain, there will not be cryptocurrency. Now, blockchain on its own, it maintains trust without needing any central authority, like I made mention earlier. While if you look at cryptocurrency, it enables a peer-to-peer value exchange over the internet using the blockchain technology in terms of security, in terms of transparency, in terms of immutability. So there is that relationship between blockchain and cryptocurrency. Now, in simple analogy, let me just break it down in simple terms. Now, think of cryptocurrency as a digital coin and blockchain as the public notebook where every coin movement is permanently written down. It is visible to all, it is tamper-proof, and it is verified by many. I don't know whether you get that understanding. Cryptocurrency as a digital coin, and then the blockchain as the public notebook where every coin movement, every transaction, be it sell, be it buy, be it send, is permanently written down. That is, also visible to everybody. It is tamper-proof and can be verified by anybody. Thank you,
All
Mr.
right.
Kutu. I can see.
All right. Thank you very much. Now, in cryptocurrency, is there only buying and selling, trading in, in currencies, or is there any other trade in other, assets apart from currencies?
You mean
I
cryptocurrency?
yes, yes.
It's a cryptocurrency is more of an asset. All right? It can be used for a series of businesses, be it in investments. Cryptocurrencies can be used for investments. It can be used for retailing. It can be used for buying and selling. All right? It can be used as a means of a stock of value. It can be used as a means of payments. All right? So it has a variety of uses, not specifically just buying and selling.
All right.
So it's an asset on its own.
All right. Thank you very much, Mr. Obaje. Now, Mrs. Poloma, could you give us some examples of cryptocurrencies?
Thank you, Tochukwu. We have quite a lot in the market, over 18 million. But I will just share with us a few. The top cryptocurrencies by market capitalization, I'll share a few of them. The mother of them all is Bitcoin, obviously, because it is Bitcoin that started the crypto, that set the stage for cryptocurrencies. So the largest and the most popular cryptocurrency known for is decentralization network and for peer-to-peer transactions, as earlier on mentioned by the prof, is Bitcoin. Bitcoin, as it stands today, has over $2 trillion market capitalization because it is the mother of them all. Then we have what we call Ethereum. Ethereum is the second largest cryptocurrency. This Ethereum differs a bit from Bitcoin because it offers smart contracts and decentralized applications, or what we call dApps. It has a market capitalization of over $314 billion as it stands today. Then we have what we call in the stablecoin space. This, the earlier two I mentioned, their prices fluctuate in value and they have no cap to their value. Whereas the stable coins that we have are pegged in the US dollar value. So they are adopted for payment giants like Visa, MasterCard, with a market cap of over $61 billion as it stands today. And we have what we call USDC. This is another stable coin, equally, that is pegged at the US dollar rate. And it is equally adopted by payment giants like Visa and MasterCard, same. And it has a market capitalization of 61 billion. Sorry, the first one I mentioned is USDT. It is equally pegged on the US dollar. And the market capitalization as it stands today is about $158 billion. Then we have the Binance coin, which is called BNB. It is a utility token, and it is equally used for payments and transaction fees on the Binance exchange with a market capitalization of over $92 billion as it stands today. We have other popular cryptocurrencies. We have the Solana, a blockchain platform that offers high speed and low cost transaction fees, you know, in this space. And also the most popular meme coins and NFTs are on this very particular block network. It has a market capitalization of over $80 billion as it stands today. The next that we have among the other popular cryptocurrencies is XRP. XRP. It is also a decentralized cryptocurrency that prioritizes speed and minimizes costs for cross-border transactions. It has also a market capitalization of over $136 billion as it stands today. Then we have what we call Cardano. You will see the symbol is ADA, ADA. It is equally another form of decentralized coin, but it has open source blockchain platform that encourages scientific researches on it. And it gives room for development as well. It has a market cap of over $20 billion as it stands today. We equally have Doge. Dogecoin, as we all know, if you hear Doge, is associated with Elon Musk. It's a meme coin that has a large followership, a large community that supports it. It has a market cap of about $25 billion. Then we have Shiba Inu. It's another popular meme coin or meme coin. It has a significant market cap. And there's a community engagement in this very particular coin with a market cap of over $6 billion. So these are a few out of the almost over 18 million coins and tokens that are in the market. Each of them brings in its own difference. Like I said, some you will see that other projects can be developed on them. Others you see that they are just meme coins. Others you will realize that they have low transaction fees. Others are community driven, like Shiba Inu. And then basically, out of the 18 million that we have, and more are still coming. Thank you very much, Tochi.
All right, for the benefit of those who might not have joined us from the beginning, you have been mentioning market capitalization. What do you mean by that? And then these cryptocurrencies, who are the creators of them? Thank you.
You discover that when we say market capitalization, it means the value that has accumulated per time transacting on that very particular coin or token. It's just like the bank has a capitalization that it has. It's the same way that goes with cryptocurrencies as well. And then you made mention, what's the second question?
Creators of cryptocurrencies.
Okay. Yeah, most of the creators are, anonymous. Some are anonymous. Some adopt a name because, like, for example, Binance, we all know who Binance is, CZ. But most of them, we discover that they are anonymous. Their creators are not known. They may bear pseudonyms, but actually you don't know them. But like that of Binance, and there are some that you know the brains behind these very particular tokens or coins that are in the market. Thank you. So it takes anonymity, and then
Well, thank you very much, Mrs. Shipra Puluma. Mrs. Shipra Puluma has taken us to the world of most popular cryptocurrency in the cryptocurrency world. She made mention of Bitcoin, Ethereum, Solana, and meme coin like Shiba Inu and Cardano. Each has its unique use cases. Some are money, some are fuel apps, others support smart contract. So we have the names, but why the needs? Mr. Obaje, what do people use cryptocurrencies instead of traditional money? Why do they use cryptocurrency instead of traditional money? What's the attraction, especially for those tired of long queues and hidden charges in the banks?
All right. Thank you, Mr. Ibrahim, for that thought-provoking question also. People use cryptocurrencies instead of traditional money, which we call the fiat currency, just like the dollars or euros or naira or the shillings, for several key reasons. And I will break down a few of them. Number one, remember I made mention of decentralization. No central authority like a bank or government controls cryptocurrency. Nobody will tell you this is how much you need to deposit or how much you need to withdraw, or you must show in your face before you can make withdrawals. No, there's no central authority that controls cryptocurrency. That's one of the reasons that people use cryptocurrencies instead of traditional money. Number two, because with decentralization, this appeals to people who want freedom from centralized financial systems. Because in another way, when you have centralized financial systems, you are more of, will I say, in bondage. So people tend to look for freedom from such centralized financial systems. Then number two, we have lower transaction fees, just like Digital Mama mentioned. Now, sending money across borders with banks can be expensive and it can be very slow. Some will take days, some will take weeks, some might even take months before getting to their desired destination. But cryptocurrencies often allow for faster and cheaper international transfers. They are fast, they are cheaper. Number three is privacy and anonymity. Privacy and anonymity. Many cryptocurrencies offer greater privacy. Nobody knows who is transacting. Nobody knows why that person is transacting. Though it might not be completely anonymous, transactions don't usually include personal information. But you know, in the centralized system, there must be information. Your information must be clear. Then number four, we have what is called the global access. Why do people use cryptocurrencies rather than our traditional means of exchanges? Anyone with internet access can use cryptocurrency, even without a bank account. Now, this is crucial with the unbanked or underbanked regions. There are villages that have network connectivity but do not have a physical banking facility that they can go there and carry out banking transactions. They need to move from one point to another to access the banking services. But with cryptocurrencies that has global access, anyone with internet connectivity can access the use of cryptocurrency. Now, number five, inflation resistance. Some currencies, let's take Bitcoin as a case study, have a limited supply. Now, unlike fiat currencies, which can be printed endlessly at any point in time by the government, some cryptocurrencies are limited in supply, and this makes them very attractive as a hedge against inflation. because the more stable the supply, the better it will fight inflation. That's why I always say that in centralized banking systems or in centralized government systems, the printing of fiat currencies continually causes inflation. But in cryptocurrencies where we have let's say we have limited supply, it causes deflation. As more people adopt that currency as a means of transaction, it causes the price, all right, of that coin or that token to appreciate, which means it is, as it is appreciating, it is fighting inflation, all right, so it causes deflation. So there's inflation resistance with cryptocurrencies. Then number 6, there is investment and speculation. Like I said, it's another means where cryptocurrencies are being used. They are used for investments. Many people use crypto to invest or to trade. Now, why do they do so? Hoping to profit from price changes. So it's just like for some people buying stocks or commodities. So that's how they also look at investing in cryptocurrencies or trading in cryptocurrencies so that they can make profit from price changes. Then the 7th one, I think, smart contracts and innovation platforms like Ethereum that just Digital Mama talked about, which brought in smart contracts, allow for programmable money, which we call them smart contracts, or decentralized application, dApps. Now, this enables things like decentralized finance, all right, and NFTs, which we call non-fungible tokens. These all come via smart contracts and innovation platforms. But however, there are risks. Like we all know, in cryptocurrency, there is price volatility. Values can swing widely. You can see a coin appreciating, and within a twinkle of an eye, it goes down in value. We call it price volatility. All right. And then there are scams and fraud are common in unregistered areas because it is decentralized. People, scammers and fraudsters tend to use it to defraud people or to scam people in areas where this is unregulated. And another risk is that it is not widely accepted as a payment system yet. But as we speak today, the world is changing. The ecosystem, the financial ecosystem is changing. Even the world powers are now trying to accept cryptocurrencies as a means of payment. But in previous years and previous time past, it is not widely accepted as a means of payment. So getting started with using or investing in cryptocurrency is easier as we speak today. Thank you, Mr. Ibrahim.
Thank you very much, Mr. Obaje. So far, we have learned from you that people use cryptocurrency for privacy, speed, lower fees, borderless transactions, and freedom from governmental control. It also gives the bank, gives the unbanked access to finance. In Nigeria, for example, it's allowed for personal use, but not regulated through banks. Interesting. Thank you for this insightful and detailed explanation, Mr. Obaje. And here's the part many are worried about. They said it's not all that glitters is gold. At the same time, not all that glitters is garbage. I'm bringing you back, Mrs. Puluma. Is cryptocurrency safe and legal to use? What should the average Nigerian or indeed African know before diving in?
Thank you, Ibrahim. The safety and legality of cryptocurrency vary, and it depends on various factors, obviously. Number one, safety. Cryptocurrency exchanges wallets, transactions can be vulnerable to hacking. As earlier on, as we heard from AI prof earlier, hacking and even phishing attacks. Two, as he said earlier, volatility. The cryptocurrency prices can fluctuate rapidly, making them risky investments. And one can lose funds. And how do you lose funds? One, if you lose your private keys or wallet access, you may lose your funds entirely. And that is why we always advise you keep your passphrase, your seed phrase, what you use to access your wallet in safe hands, in safe place, especially having a diary that you scribble them and store it secure. Just as you would store your ATM card, your checks, and your password to your checks, to your ATMs. Same way you ensure you keep them safe, because by adventure you allow someone else have access to it. Honestly, the story can be different. Secondly, the legality, as you rightly asked. The regulatory environment. Cryptocurrency regulations differ by country and then jurisdiction. Some countries have clear regulations, while others have restrictions. Nigeria just came out of, Nigeria, and Nigeria just legalized the use of cryptocurrency. In as much as, yes, the clear-cut regulations have actually not been brought to bear, of which we know they are coming, that will understand them and know better. So we equally have taxation. Cryptocurrency is subject to taxation in some countries, and tax laws can be complex. So each country has its own tax laws, which differ. So they cannot all be the same. And then we have what we call anti-laundering, anti-money laundering, AML. Then know your customer. So many countries may require cryptocurrency exchanges and service providers to comply with their anti-money laundering regulations and the KYC, that is know your customer regulations as well. But then we have best practice, what we call best practice. For anyone coming into the blockchain and digital asset and cryptocurrency space, you have to choose a well-established and reputable cryptocurrency exchange. Two, you should always ensure, like I said earlier, secure your wallet. Use strong passwords. It could be alphanumerical, including symbols, and then enable a two-factor authentication for the exchanges you're using, for your wallet, even for your phone. And then keep your wallet software updated, because our apps, they keep on being updated regularly. So one has to make sure you update, because if there's a new software that is being added by the app developer, as you update, everything falls into place. But if you don't update, sometimes you find it very difficult. You say, I checked and I didn't see anything in my wallet and things like that. And it could be due to lack of updating your wallet for software, updates that have been done by your service provider. Also, as we are in the Dharma Academy, we are here to give people knowledge for them to understand. So education in this space is key. Education is key. And that is what we profile here. That is why we are partnering with DDM to offer in this space. So before you engage, do your own due diligence, research well, educate yourself about the risks, the regulatory environment in the country where you are. These are key and very, very important. So, but in conclusion, while cryptocurrency is safe and legal to use in some countries and others, it is also essential for one to be aware of the potential risks, like I said earlier, take steps to mitigate them. And by understanding the regulatory environment in wherever you are, and then taking security precautions by being cautious about your investment, you can navigate this space with ease, with informed decision, and with bold confidence. Thank you.
All right, Mrs. Poloma, how do we start investing in this? For beginners, for novices, how do we start the investment into the cryptocurrency or blockchain world?
For one to start investing, like I said earlier, education is key. And this is what we offer in Dama Academy. And that's why we are here in this space. For people to get informed, to do their own due diligence, to be able to navigate this space. Because if you don't have the education, you'll be fumbling and you'll end up losing your funds at any given time. That's just the basic truth. So key education, get proper information, navigate the space with informed decision about where the country where you are, if there are regulations and some legalities that you need to follow. Ensure you do that. And then always do your research at all times before you get into this space. And you can equally join us on Dama Academy to be able to learn more, get more knowledge, so that you'll be able to navigate this space and be a partaker in the blockchain world.
Right, let's have some insights in that direction from Mr. Obaje. Mr. Obaje, can you hear me?
All right. Thank you, Mr. Tuchuku. I think getting started with using or investing in cryptocurrency is easier than ever. It's easier than ever. But it's important to proceed carefully and informed. So let me just give us a step-by-step guide for someone who wants to begin. All right? It will help. Just like Digital Mama made mention, learn the basics. Learn the basics. That's the number one thing I would advise any beginner to do. Before investing, understand key concepts. What is cryptocurrency? How does blockchain work? What are Bitcoin, Ethereum, wallets, exchanges, etc.? These are things that you need to learn. Then, you can just start with YouTube video tutorials. You can read from blogs. You can take free courses. You can join academies, just like she just rightly mentioned. Join Dama Academy or go to Coinbase Learn. There are series of platforms that you learn all these basics. So number one, learn the basics. And then number two, choose a reputable crypto exchange. Now, an exchange is where you can buy, sell, or trade crypto. Some of these popular exchanges, we have Coinbase, we have Binance, we have Gemini, we have Mexi, all right? There are a lot of them. We have Bybit. But the basic thing is, even as you are choosing a reputable crypto exchange, look for security, look for ease of use, and look for the one that is supported in your country. Not all exchanges are supported in some certain countries. Like in Nigeria, uh, you cannot use Binance for exchanges. So look for exchanges that are supported in your country. Then number three, you need to set up a wallet. A wallet stores your digital assets. That's a simple definition. And like in the previous version, we made mention of different types of wallets where we have the hot wallets, which are online, more convenient, but less secured, which the security is in your hands. All right, we have examples like MetaMask, Trust Wallet, Coinbase Wallet, and the rest of them. And then we have the cold wallets, which is offline wallets, which are much more secure for long-term holding, just like Ledger and Trezor. All these are cold wallets. But if you're just starting, I want you to also understand that most exchanges offer built-in wallets, which we call them the Web3 wallets. Most exchanges now, they have wallets embedded in them. So the fourth thing you need to do is for you to fund your account, either through fiat currency like the USD, the Euro, the Naira. Okay, you can use bank transfer or debit card, but you need to watch for higher fees, because when you are using these coins, it might cost for higher fees. All right, and also start with a small amount that you are comfortable with. All right, start with a small amount. Then number five, you need to buy your crypto assets. Okay, all right. You can start with the popular ones, but if you are going into investment, I will not advise you to go with the popular ones that have very huge market capitalization. If you are going into investments for a long period of time, all right. Now we have Bitcoin, we have Ethereum used for smart contracts. You can even buy the stable coins, the USDT and the USDC that were mentioned by Digital Mama. Also, you can buy those upcoming tokens. Like she rightly mentioned, we have over 18 million tokens in circulation. Which one will yield good results? It is based on knowledge and research. It is based on knowledge and research. All right. So that being said, number six, after you must have gotten your assets, you have bought your cryptocurrency, be it Bitcoin, be it Ethereum, be it body scan AI, all right, which are falling in love with over time. You need to store it safely. You need to store it safely. You enable your two-factor authenticator, just like she rightly mentioned. You use strong passwords, all right? And then you should consider transferring your crypto assets from exchanges to personalized wallet for better security. So that is from centralized exchanges to a centralized to a decentralized exchange, all right? Maybe from Bybit, you are taking it to Phantom, all right? You are taking it to Soulflare. All these are decentralized wallets, all right? And then number seven, you need to track and learn continuously. Learning is a continuous process. The technology we have today is advancing on a daily basis. So if you keep to your old knowledge, you might become vulnerable in the ecosystem. So track and learn continuously. Use apps like CoinMarketCap, CoinGecko, all right, to track prices and also get news, informations. Continuously follow updates because the market is changing fast. It's changing fast beyond your imagination. And the bonus tip I will leave with this question is try it without some apps offer 3 crypto rewards. Try them. some games or platforms offer play to earn or learn to earn rewards. They might be very, very little, but you can start from there. And then cautious before you invest. Like we said, the market is a volatile market. Only invest what you can afford to lose, especially as a beginner. The crypto market is highly volatile. Avoid also scams. See, if it sounds too good to be true, it probably is. If it sounds too good to be true, it probably is. So when you hear this is too good to be true or to be real, run away. And also try consulting a financial advisor. Try having a mentor as far as this space is concerned. Someone that is higher than you in knowledge that you can always consult before you go to take some actions. Thank you, Mr. Tochukwu. This is the little I can contribute with regards to that question.
Of course, we have heard the professor of AI. If you are confused about anything as a beginner, you try to consult somebody who knows a lot more than you do. And of course, one of the institutions that offer this massive amount of knowledge is DAMA, the Diaspora Digital Academy Management. Could you remind
Digital Assets Management Academy.
Digital Assets Management Academy based in Abuja. That is a fountain of digital knowledge. Thank you very much. We have a question, one question here in the comment section. Yes, good morning, sir. Omar. Thank you for the enlightenment. Can a coin be transacted on decentralized exchange? How? Because I thought this can be done on centralized exchange. I would like Mr. Bajaj to answer the question, please.
Okay.
Okay. From on decentralized exchanges, right?
On decentralized exchange. Yeah. Yes. Can a coin be transacted? Yes.
Yes, it can. It can. You can convert one coin to another on the decentralized exchange. Yeah. However, if you want to convert a coin to fiat currency now, that is where you need a centralized exchange. But on the decentralized exchange, transactions go on there also, where you can convert from one coin to another or from one token to another. Just like we are talking about body scan AI. Let me use it as a case study because body scan AI is not on any centralized exchange. You can only get body scan AI on decentralized exchanges. And how do you get it? Since it is not on centralized exchange, you convert it or you swap it from one token or one coin to another. Basically, the body scan AI is built on the Solana network. So we always advise that you swap from Solana to Scan AI. And also, when you want to convert it to fiat, since it is not on any centralized exchange, you convert from on the decentralized exchange from Scan AI to Solana. All right? And then move it to a centralized exchange and convert it to fiat currency. So transactions can go on decentralized exchanges. And you can do peer-to-peer transactions on decentralized exchanges. So transactions are going on at all times on decentralized exchanges, just the way they are also going on centralized exchanges.
All right, thank you very much, Digital Mr. Obaje. I believe there are no more questions. We have run out of time. So as we close today's session on the nature of blockchain and cryptocurrencies, let's bring to mind the main takeaways. And we said that blockchain is a revolutionary decentralized digital ledger that securely records transactions across a global network, making data transparent, immutable, and free from middlemen like banks. So on this foundation, cryptocurrencies, digital currencies secured by what Mr. Bate called cryptography, operate as a peer-to-peer payment systems that empower anyone or anywhere to send and receive value securely and directly. So we say a big thank you to our expert speakers, Mr. Moses Obaje and Mrs. Shifra Poloma, for guiding us through this digital arena. The blockchain and crypto space is evolving in leaps and bounds, and this space is opening up endless opportunities for innovation, investment, and financial inclusion. So thank you very much, Mr. Obaje and Mrs. Poloma.
Thank you for having us this morning, Mr. Tochukwu. It's my pleasure.
All right. We are urging us all to cultivate an inquisitive mind and get ready to be part of the future of technology. Until next time, keep exploring this blockchain world because the digital revolution is just the tip of the iceberg. So thank you everyone for joining this program.
For having us. Bye.